This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.
The Central Bank of Nigeria, CBN, is set this week to host its 301st Monetary Policy Committee MPC meeting, with the gap between the official and the parallel exchange rates narrowing to levels recorded in 2023. In its last meeting, the MPC retained the benchmark policy rate at 27.50%, a decision that reflects both cautious optimism amid improving macroeconomic fundamentals. The meeting is set to begin today and will last into tomorrow, the 22nd of July. Joining the conversation this morning is economist Adegboyega Adebajo. Good morning, sir. Thank you for joining us on the conversation.
Good morning, Stephen. Pleasure to be here, as always.
Pleasure to have you with us. Let's start off with your expectations of the MPC, the deliberations at the MPC over the next 48 hours.
Right. Well, the projected outlook is that the CBN will continue with a hold phase, maintaining the 27.5 rate. And that's essentially because the results so far have been most welcoming. Inflation itself has moderated. I wouldn't quite say it has come down. And that's essentially because food prices have the tendency to fluctuate on a seasonal basis. And we've seen instances of the insecurity and transportation difficulties or supply chain difficulties affecting food prices. And that's had its impact on inflation. But in general, it has moderated, and the foreign exchange market has shown significant signs. And of course, in the 6 months so far this year, we've seen a growth of about 3.7% in the economy itself. It's clap on the back for the central bank and the governor. And I therefore imagine that they will continue with this because there are risks. It's a fragile hold, and they would like to see a consolidation and most likely a normalization before considering any changes in policy.
So, Mr. Adebajo, there's a question. You say that the dip in inflation from the June figures is not enough. How steady of a decline would we need to see in inflation before we expect the MPC to actually reduce rates?
Okay, so there are two critical aspects of inflation that show a lot of volatility. There's food and there's energy. While food prices have sort of been a lot more stable and you can attribute fluctuations to certain structural factors, energy prices in themselves have remained considerably high. And as long as that happens, that affects the cost of doing business. I had reason to speak to a couple of people who are interested in starting up some businesses, and their main concern was energy costs, electricity for that matter in particular, and the unpredictability of petrol prices. And so that's the key thing. With that kind of situation, and that of course is outside what the central bank can directly impact. The best they can do to manage that is to deal with the rate through the NPR. And so that's what they're trying to do. Of course, some petrol is still imported, and we know that there's an attempt to try to produce so much that the amount of petrol we need to import is reduced. Now, that import continues to put pressure on our balance of payments reserves and FX positions. So these are aspects that are there for the CBN to consider. And
all right.
So that's one of the reasons why they'd like to see some stabilization first, those factors.
So I'd like us to quickly talk about the exchange rate. Last week, there was all this hubbub about how there's now been a merger in the difference between the official market and the parallel market. Although, if you look at the papers this morning, there are some experts who are countering and saying that we've not yet achieved stability and there's some fragility within the system. And if you also consider that right from the start, we'd been told that the Naira is undervalued and a safer bet is somewhere around 1213, can we really say that we've achieved some sort of stability?
Nabila, I think you've touched on a very important aspect, and that's essentially that, the CBN has its target in terms of where it would like its policies to take the indices we're looking at. Just like there's an inflation target below 20%, the 1,200 is the target for the Naira by the central bank. And so it will continue to use policies to try to reach that level. When the official exchange rate reaches that level, then it can start to also apply policies to manage the gap. The gap will never be a permanent thing because there's so many factors affecting the rate. It may close, but it's not. It's certain that it will open up again in terms of creating a gap. It's all a matter of demand and supply on either market.
Mr. Adebajo, thank you very much for your time and expertise on this conversation. Adegboyega Adebajo is an economist who joined us this morning to speak on the Central Bank of Nigeria just essentially hosting its 301st Monetary Policy Committee meeting. The meeting is expected to begin today and will last into tomorrow, the 22nd of July 2025. You're still listening to Radio Now 95.3 FM Lagos. We urge you to stay tuned. The conversations continue on Now Breakfast.
This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.